Our conversation is going to be about the economy, as we talk about, as we say. Dr. Steve Gachie is an economist. He has taught economy, and he now is a business administration and management consultant. Good morning, Dr.
Good morning.
How are you?
Been well.
Yeah.
Finally, we meet again.
Yes.
And I keep telling people, if there is one show that knowledge works, is this one.
Mm-hmm.
And for Kenyans who are not looking for comical relief, therefore, not any other.
Very good. Very well said. Very well said, and thank you very much for that.
Most welcome.
Thank you very much for that lovely compliment.
Yes.
Yes.
Asante sana. You will teach us about the economy today. And we, like I said, data from KNBS is indicating that inflation is actually coming down. Inflation has now gone all the way down to 2.5%. And that is indicative of very many things. The Standard today has that story. Inflation eases in October despite complaints of increased hardships. Kenya's inflation rate dropped further to 2.7% in October, even as the cost of living continues to skyrocket amidst enhanced taxes imposed by the government. So, inflation is dropping, the cost of living is going up. That's an oxymoron, isn't it?
It is.
Aye. Then let's talk about it shortly. First, Citi will give you the day's proverb. Every week, he goes to an African country and brings us proverbs from that country. This week, you've been in which country?
We've been in the state of Libya, which once upon a time was a kingdom. Believe it or not, it had a king. We are very unfortunate. We've never had a king. We've had aspiring kings, but we've never actually had substantive king.
One big king.
One big. The people have tried.
We've had our small kings.
Small kings.
Loy born here.
In the village, we have them. People who presume that they're kings.
Yes.
But the good thing is that short-lived those kingships.
Yeah.
Right. Fish eats fish. And he who has no might dies.
Fish eats fish.
Yeah.
And he who has no might
Dies.
Fish eats fish.
Yes.
And he who has no mind dies.
Yes.
Interesting. I think I would shoot. I don't want to overthink.
Don't.
I'll go the literary meaning. There's a lighter, I think, in West Africa who talked of man eats society.
Man eat man society.
So I'll draw parallelism from the same. And I stay there.
Man eats man.
Yes.
And he who is weak dies.
Yes. Usually, big fish eats small fish. And even bigger fish eats big fish and small fish.
Strong fish eats weak fish.
Yes.
So am I within the score?
Oh, my friend, you are not within. You are all over the scope.
You're bang in the middle of the score.
I was actually thinking I would get something from Ghana because of his the Ghanaian cap. Today is not donning it. It's more West African than East Africa.
It's actually Papua New Guinean.
Oh, really?
Yes.
They're neighbors, aren't they?
No. That's Guinea.
Oh,
there's Guinea, and then there's
the small one.
Bissau,
And
that's
there's
West
Equatorial
Africa.
Guinea.
There's Equatorial Guinea, they're all Guinea. But
And
this
then
one is
there's
Papua New Guinea. It's near Australia.
Oh.
I have relatives there.
Okay. Now, when you talk about Tala, and you talked about there's this story when you're in high school, university, you'd get to a matatu, and what they would do, when it breaks down, the conductor and driver would disappear.
First order of business, take off.
So there was no one to give you refund.
There was no refund clause.
then a lot has changed then. So then I would imagine if it was there during those days, would have been an instant solution.
Imagine. And now it's an instant solution to those who have the benefit of actually downloading it.
I would say that.
So that story, let me just continue with a bit of it. Data from the Kenya National Bureau of Statistics, the latest consumer price index published by the KNBS shows that in the last 12 months ending October, the inflation rate has dropped by 4.2% in the last 12 months, right? On the flip side, Kenyans have had their income squeezed further with enhanced taxes, among them SHIF that has been effected starting this October 1st, and the housing levy, which exacerbates the cost of living. According to the CPI numbers, inflation reduced from 3.6% in September to 2.7% in October as a result of a drop in the prices of housing, the price of water, electricity, gas, and other fuels. There was also a drop in transport, which is explained by revised fuel prices that have been gradually dropping from 200 shillings and crossed in September to 2023. It had hit 200 shillings last year. The two indices, that's housing, water, electricity, gas, and other fuels, and transport, are the only ones that registered a drop within a month. In the October cycle, petrol prices dropped by 8 bob to retail at 180. Diesel is now 170, dropping by 3 bob. So this is what's happening. It is indicate the researchers use indices, and they're looking at the cost of gas, the cost of energy, electricity, the cost of water, the cost of all these consumables is coming down, and so inflation then is coming down. But then, Dr. Gachie, as we are saying, the cost of goods is still going up. How is that possible?
Well,
the cost of living is still going up.
It's very interesting because usually you should have a linear relationship. That when the inflation is going down, the cost of living is go down, and you have money in your pocket, because meaning you are spending less for more. Currently, what we have is what we call an inverse relationship. One goes up, the other goes down. When the other one is going down, the other goes up. And I would just want to quickly go to 1982. There's a gentleman called Jim, I think, Cavell, during the elections of Bill Clinton. And he said a very simple thing: economy stupid.
It's the economist.
It is the economy stupid. What was meaning that everything that goes, it goes back to the economy. First, we need to look at, when you talk about inflation, what has led to the reduction of the inflation. What has happened is that because of God has been very benevolent, blessed us with a lot of rain. So we have had a lot of harvest. So the cost of food, and especially maize and maize meal, has gone down. However, there is this urge to jump and say the economy is doing well, just because either the economy is doing bad because maize meal price has gone up, or the economy is doing well just because maize meal has gone down. And I keep telling people, when you're driving, it's actually what we call the dashboard. So when you see that sign of check engine, what it means is tell you, check at every possible aspect of the engine to get to know what is happening. Okay? It doesn't mean necessarily, maybe you're running out of oil or you are going to grade to a halt. Is that you need to have a holistic look at what is happening. Basically, inflation is a good indicator of where we are headed. But also we need to ask ourselves, what has caused that attribute? And that's why you see food stuff are going down. Basically, we say the food basket, what you buy every day for your dinner table. Maize meal, tomatoes, cabbages. That aspect could be going down, but then you ask yourself, do also Kenyans have the purchasing power to buy? Because maize meal or unga can be retailing at 100 bob, but can you afford it? In terms of the purchasing power, do you have the money? If you look at other aspects, other fundamental economic fundamentals factors, do they speak to the same? That's why you ask yourself, why would it be then inflation is at 3% or 2.7%, but the cost of living has gone up? Okay? Meaning, one, there are the factors that are not flowing with this indicator. So something is very structurally very wrong within the economy or the policies. For example, if you look at it at the same time, you look at data that almost 20% of those people who borrowed money are not able to service their loans.
Yeah.
Okay? If you stretch it to Hustler Fund is 50% of NPL.
50% of the Hustler Fund is non-performing.
It's non-performing. Okay?
Yeah.
But where Hustler Fund is concerned, many questions arise, but let's go with that.
Okay? 50%,
Are not paying.
one of which of the sector which is struggling is manufacturing. So what does manufacturing do? Creates employment. What does that mean? The value addition downstream for our agriculture, which feeds 70% of our households. So downstream to the manufacturing, there is no value addition because our sector is not doing very well, meaning if you go back upstream, 70% of households are struggling. And when they are struggling, they don't have money in the pocket. And when they don't have money in the pocket, they cannot buy, meaning we are producing, we are not consuming.
So the demand for these goods is low.
It's low.
And that could drop inflation.
Good. Despite the inflation, stretch it again. The middle class. Our middle class is shrinking.
How do you know this?
In numbers. Rule of the thumb. You expect our middle class stays in addresses as Clear. Do the walking. How many signage of to let are there? Flip it on the other side of Thika Road, another. Is the demand of housing high? Yes. Why? Because there is almost opposite migration. So meaning he was paying a rent of 70,000, now I'm comfortably paying 30. Would that mean by now our statistical data, meaning that the cost of housing has reduced? Would that data speak to that?
No.
Okay. So who could? It could. Who consumes? Our middle class. If you go to other jurisdictions like the US, middle class drives the economy. If you look at the model of the economy, even which is there, they are saying bottom up, middle out. Meaning they want to create more of the middle class that is going to consume what the industries are producing. So when you put all that together, then therefore, you're able to say, yes, we have a GDP growth of now revised 5%, which is not real economic GDP growth. Real GDP means when there is 5.7, 5.2% growth, even your pocket growth with the same
will be corresponding.
So I just wanted to create that bigger picture so that when we say inflation, which is true because Lane has been there, it is nothing much the government has done. It's actually to the benevolence of macro fundamentals, exogenous factors, which we have no control.
Also, the government also positioned itself properly to support. So the rains were coming, but then there was a subsidized fertilizer, helping farmers with the inputs that they needed so that they can grow food.
Then you'd ask yourself, therefore, if that is the hypothesis, then the cost of production would have been so less costly that the farmers within the maize basket of Lydiah are not complaining when you buy their maize 90 kg at 2,000.
True.
You know, that would be the genesis. Fine.
That they can sell it to you at 2,000.
2,000
and they'll still
comfortably make money. However, what they are saying, the cost of production is more than what they are selling. So that is why we don't have a boom in the Rift Valley.
Is this what then brings about what we call cost push inflation?
Exactly.
What's that?
It's to say that the inflation has grown because the cost of production has gone up. You know, there are three factors where inflation normally comes from. Food-led inflation, when the cost of food goes up. Energy-led inflation, when the cost of energy goes up. And Forex-led inflation, whereby your currency loses value, So you're using more money to import, meaning, like what City has said, the cost pushes inflation to become elevated. Basically, that is it. However, we agree, the cost of essential, the food basket, your dinner table. However, you are not able to buy because you have no money in your pocket, because the cost of doing business, whether in informal sector, the cost of loans, for example, very expensive. Okay? Meaning, if I'm producing, then whatever I produce, and homework to you, go and look what are those items which have the price have become easy. It's basically 80% agricultural. Why is it that cooking oil is not taking the route south? Because still there is a factor of production, there's factor of import, there's factors of energy and all that. That way you would explain why the cost of living is still going up. The cost of buying a car has not gone cheap, like what my brother had said. Maybe the cost of cheese could fall. Would you say then...
Cost of living has fallen.
Exactly.
Why? Because we don't eat cheese.
Because it is not on your dinner table.
It's not a major factor when it comes to what we consume.
Exactly.
Yes.
So not unless we create as many opportunities where people can earn decent living. You look at our taxation regime. You alluded to it. That you look at the payslip. In fact, I predict that in the next maybe 5 years, a lot of people will move from formal employment to informal voluntarily. Because the argument is that maybe when you're out there doing a small business, would be making more of your money than when you are seated in the office.
Does that then not presume that there'll be money in the economy and that the circulation then will make it possible for you to do business? Meaning, you have a business and there are takers to your business.
That is the assumption.
That is the assumption. But what is our lived reality?
The lived reality is that today, and that's why we are talking to the cost of living, that whoever has a small business, medium business, the corporates, it's become so expensive to produce that the services are dear. The products are dear. They're expensive. Apart from that, which is agricultural in nature. If you look at the city, when you go to the supermarket, you do your shopping, you can afford it, it's affordable, and still you can have some savings. We can do another assumption. If you look at the entertainment industry, all over Nairobi, beautiful places where people do shalehe almost daily. Does that then mean people have money?
Well, they're spending it.
Not necessarily.
Not necessarily.
No.
So they're spending it.
But
Yes,
then
they are spending it, but on what exactly?
On booze
then
and meat.
you know, on the value of it, if you look at the the assumption would be then these people has a lot of money because entertainment and luxury lungs together. Meaning that you are clothed, you are fed.
Sorted out the basics.
But that's not the issue, because then again you are saying the cost of living is high, yet people can afford this, meaning what they are doing, they are foregoing savings.
It's escapism, because when you have a situation that is beyond your control, you are more likely to head towards something that gives you pleasure and gives you ease. So in essence, you're not in your right state of mind. You're actually not thinking rationally.
So what you're saying is when you see all these joints opening every new day, big ones and bigger ones and getting full every day of the week, this is a mental health issue.
It is.
It's not a sign of economic
Not
growing.
necessarily.
It's a sign of
it is not. And you see all these lovely cars being parked. No. You, my friend, I see where you're going with this one, but something is not right.
That's what you mean.
Is not right. What I mean is that there's a population of people who actually populate these establishments.
Yes.
All right? You can tell by the vehicles, you can tell by whatever it is, the indicators you want to tell. But it is not an indication that the economy is necessarily growing, because if you're talking about the growth of economy, you're looking at the larger population, not a particular sector of the economy. No. That sector of the economy is not representative of the majority of those who live in this country.
And exactly. In fact, when you look at the demographics for those who are the patron of those, one thing come out is that most of them are foregoing savings. If you look at our savings ratio, it's less than 10% of our GDP. Okay? Meaning, in every household, maybe 2%. For a household, maybe 2% of the households are able to save. Okay? So, I was drawing that parallelism so that we can talk about the idea that inflation is down, cost of living is high.
It's high.
Doesn't mean then people are doing better because they are going to the entertainment joints. Okay? We are saying we are foregoing other issues within the economy that would rather have been people would be doing individually, whereby that because economy grows because of our activities. And that is why you go when you're looking at our GDP growth, which sectors drive the growth and what is the impact? One, the financial sector. That is where there is highest growth, GDP-wise. Why is it so? Because government is borrowing. So all our banks are not making profit because yourself and I, we are doing business with them. It's because treasury bill, T-bills, they are getting interest from the government. If you go to retail and wholesale, you must buy your unga. So when you see all these supermarkets coming out in every aspect of our estates, doesn't mean that our economy is going because your share of wallet significantly goes there. Whether you get some little money, you must eat. Meaning, the sectors, finance sectors, how many people are employed there? Wholesale and trade, how many are employed there? But 70% of our livelihood we get from agriculture. Meaning, if agriculture sector is not growing, people don't have money. So until and when we have a Marshall Plan or we tinker our agriculture, and I thought the model, the bottom-up model, was actually, if you look at it, was more phased into agriculture.
Yes.
What I was saying, and because I think even those in government don't understand it, they know the model, but they got wrong what we call implementation and the theory of change.
Kenya's inflation has dropped to a 17-year low, coming to 2.7% at the end of October. And this is what the Kenya National Bureau of Statistics has basically released. If you compare that with September, where it was 3.6%, October 2.7%, it has basically dropped by 4.2% in the last 12 months to October. Inflation is dropping. What should that mean? It should mean that you should have more money in your pocket. Do you? Dr. Gachie, who is Dr. Steve Gachie, economist, business administration and management consultant. Falling inflation versus the pocket. Inflation has dropped to 17-year low on falling food prices. Imagine, it's gone back to Kibaki days. That's how well we are doing in terms of inflation dropping. Surely you can't just say it's just because of God. See, that God has been there for all those 17 years, Dr. Harry. There must be some intervention from the government. And that's what I was saying. If you look at maybe when they say, the administration came in and said, let's try and impact and have wide impact, go to production, go to inputs. Impact at that point, subsidize inputs, fertilizer, support farmers with seed, support farmers with information there. Then come also and look at energy. See how you can support and subsidize this. They said, let's not subsidize at the point of consumption. But also at the same time, they have still been able to use the price stabilization mechanism to manage the cost of energy. These are interventions that the government has put in place. So even as it rained, those interventions were also well placed to help inflation come down.
I'll go back to what you mentioned about Kibaki days. And a rhetoric question. What do we remember Kibaki about or Kibaki for?
Economy.
Growth. Isn't it?
No, not just growth. Tangible growth that you could experience and you could feel and touch.
Exactly.
Sustainable growth.
Yeah, you could feel it, you could touch it, you could see it.
Exactly.
It wasn't in the textbook.
Exactly. You didn't have to go to the supermarket
No.
to see the price of unga.
You didn't read a book.
You didn't need to go to then Nakumat and to look at the price of unga and say the economy is doing well.
No.
What you do, there was even what we call the velocity of money within the economy. Wherever we were, all of us, I remember outside there, the mainstream banks would hawk money.
My friend, there were kiosks everywhere asking you to borrow money.
Yes.
If you look at Thika Road, it became unrecognizable because of the development, the infrastructure, and all that. If you go to, and I think that is where there was almost a generational change of old money to new money. What do I mean? Young men then, in their 30s, 25, 35, became, if I may, millionaires. Okay? And you could feel it all over because the economy was growing. Actually, 7%.
Yeah.
The price of foodstuff, inflation was low. By the way, sometimes it even short, but people were able to bear. If you look at about 208, 209, you go to the inflation index, they were high.
It was quite high. There were the Unga protests that time.
You remember?
Yep.
Yes,
And that is where Kibaki intervened and we had GOK Unga at 90. Then, today, Unga is about 120, about there. Then it was 80. People were complaining the prices are high, but they could afford and the economy was growing. That is the difference between then and now.
So between interventions then and interventions now.
Yes. Because the intervention then, they were more deliberate. Look at the loans. When the government borrows from domestically, we normally have what we call clouding effect. That when you go to the bank, no one will speak to you because you are expensive to manage. You are risk.
You're a high risk.
You are higher risk than the bank, who the manager would not chase, will not look for people to chase you around. Then, meaning the person in Komba, Kamukonji, Kisumu, wherever they are, they cannot be able to access money. And when you don't access capital, you cannot recapitalize your business.
Yeah.
And when you do that, it becomes the interest rates are high, so the loans become expensive. Okay.
Yeah.
And when we do that, then everything, the domino effect, that everything else becomes expensive. So that is why we are talking about. Yes, the inflation is low. Actually, it's almost 20 years. When we are at almost 20 years.
It's almost 20 years, eh? So that's what I was telling you, Dr. Just consider that maybe those interventions, yes, they may not be, in tandem with what we were seeing 17, 20 years ago. But then it was interventions that are coming in at also another unique period. A unique period where 80% of our money that we're collecting as government is going to repay debt. Debt whose value is not actually being felt right now by the same economy. Money was borrowed to do some infrastructure projects. Those infrastructure projects either didn't happen or they're not bearing fruit, so they're not even driving the economy to grow. But we have to pay. So there's money that's going there. So there are all these other factors at play. Now, try and stabilize those ones. Try and make sure that your book, your credibility as a government still stands. You can borrow money. IMF comes in, is giving you now money. Look at right now, the interest rates are dropping in terms of the bonds and bills starting to come down. So the bonds and bills are starting to come down. The banks will start coming to us so that they can lend us money. And all these other factors are at play. Maybe this is part of a long-term game.
Eric.
Okay, you can't see the game?
Eric, for the economic fundamental factors don't change.
They're the same.
They are the same.
They are constant.
They are constant, especially macro, those which you have no control. For example, tomorrow you won't tell us how much oil will cost. Or the dollar after the election on 4th, we don't know what new policies will come.
Yeah.
So you have no control. You don't know what will happen in the Middle East. You don't know what happens when South Korea army goes to help Russia. North. Those are factors beyond your control. Let me agree with you that 70% of the revenue that we collect goes to pay debt, which is true. So then, what did we do with the debts that we borrowed?
Sherehe.
The mental health issue that you asked.
So meaning then that probably, Eric, we are borrowing money to pay our bills. Normally, we are borrowing to pay maybe salaries, to pay our OPEX, operational expenses. And when we borrow for capex or infrastructure projects, the assumption is when you do those huge infrastructures, there are going to be a trickle effect to the economy. And I think that is a model Uhuru, His Excellency, was using. Okay? That let's do these infrastructure projects so that we can have a trickle-down effect. However, it didn't happen. Why? Because significantly of the money were going back
outside. It wasn't trickling down here.
If it's China,
it was trickling in China.
If it's China, they'll give us this loan to do this infrastructure project. But instead of bringing money, they'll bring materials.
Yeah.
And personnel.
So those are the small industries which grow within the ecosystem who are not there. And that is why people at one time, they asked His Excellency, we don't eat loads. Because they couldn't get the economic value of what was happening because there is no money circulating within the communities, the societies, when this is happening.
And actually they should have, because anything that is infrastructural, just look at what it brings about. If you are building something, the materials that are needed for it.
Yes.
You will need labor.
Yes.
Everything that goes into it guarantees that there's more money available to more people than prior to that. And that money will also trickle down to others.
Exactly. And that is what the same model with Kibaki, but Kibaki and his team, they understood the theory of change. Okay? For instance, if you look at the model, the bottom-up model, I think we are long on the theory of change on the agricultural sector. There was that discussion that we'll have Jinales and in Busia and all that. And also what Moses Kuria was doing, launching the buildings. Sometimes we stop at the output level. Okay? Instead of the outcome level. Because at the outcome level, that is why you get change. For instance, I keep asking myself, His Excellency President Ruto says that we are not going to throw away hides and skins for Laikipia and Kajiado. We'll do shoes. So the theory of change is therefore, how do we make the Maasai to sell shoes? Because that should be. You understand?
Yeah.
Output.
It's how we turn the skin and everything to a shoe production facility that is owned
by those who have the raw material to actually, which eventually ends up as that finished product.
Your cow into hide, into skin,
Yes,
into
the Maasai has no business to sell.
Just the cow alone.
They are not instead with the industry. They want to have a society that will be selling shoes. And how? We have about 2 million Kenyans who are sitting exams this year. A market. So the government would say now, we have the shoes from Maasai's, sell. If you go to cotton growers, it's not about giving seeds, because that is where we go wrong. No. It is the people in Busia, in Mombasa, Kwale, in our place in Kenya, selling clothing. It's
so
how
they run their own ginneries.
It's how they go beyond the ginnery.
It's how you move them from the seed to that old man. They say this normal man on the streets saying, we sell textile to Kenya Army. That is a complete theory of change, meaning that is how you'll put money into people's pockets. And that is how, if you look at the architecture of the bottom-up model.
See, that's what it was. It has.
But you see, today...
But it has that, City. You had a conversation, I wasn't here that day, with the governor of Homa Bay, right?
Yes.
And she told you about what they're doing with cotton.
Yes.
And then what they're also doing with setting up ginneries. And then beyond the ginneries, what then the plan is. See, that's
Eric.
Bottom up.
Let me finish. Let me finish. Recently, I think the Minister of Trade was in Loiro launching Industrial Park. And he was happy to say, we'll have this section of Chuakari, the other one for these, about 100 people. When you open an industrial park, what are you addressing? Standards. It is not how many will sit in those chairs to Goga Mambati. Sorry, it is at the end of the day, why we don't export is because we are not standardized. You make one wheelbarrow here, another one here, they don't look the same. They are fraternal twins.
They're not identical twins.
They are fraternal.
Yes.
So you cannot export. So I thought, when you talk of industrial park, you are addressing the issue of people in Gekomba here, those who make the pants and either Saduku or Shule, to standardize to the world's standards, so that now, 5 years from now, you can have that container destined to the USA. And the same quality from China is identical. So once you don't get the theory of change, palm oil, we use about 300 billion to import edible oils.
Every year.
We are supposed to do in Busia and that belt. It takes minimum 7 years to maturity. Show me one. Show me a pilot that is 4 years old.
Well, the government is 2 years old.
That's what I'm saying.
So bottom up is how do you?
So what you are saying is that if you want to, if we are going to have a Marshall Plan about our economy, we must tinker our thinking, our approach, strategy. Otherwise, we'll be here comparing Kibaki, Uhuru, Ruto, and the one who is going to come, because there was no disruption in thinking.
Yeah.
We've been traditional, even on economic modeling.
I wouldn't call it traditional, I'd call it retrogressive. Because if you're not thinking of the value add to whatever it is you produce, you're not making any progress.
And you must know where you are headed. We should not celebrate when a minister goes to ground black for aggregation centers. What is that you are aggregating? If it's Nyandarua, 2 years ago, you should be having upstream what you must aggregate when this building is complete.
Yes.
Not unless then our economy, I'm addressing about the economy, that we must have a different view of how we must tinker our agricultural sector, because by architecture, 70% of our households rely get their livelihood from agriculture. Even if we so brief, we are in fourth and fifth digital revolution. When we do digital superhighway, what is that we want to get? Does the government goes and say we have loaded 100,000 kilometers of fiber? No. We should be saying we have about 10, 5, 20 incubation centers. And also, let me go back to the Hustler Fund. What did we want? Because when the CS of Paranya got to the office, he said we must pay. But he didn't ask how many successful enterprises.
What's the impact?
Employing. For me, Hustler Fund ought to have had one node that goes to incubation. And so is the university model. It's all about economy.
Stupid.
The university model should have a node that give the university a significant amount of money for incubating the business, so that when the students graduate, you go back and you have these ideas, technological incubate, and that's where we should be now with the new system for sure. Why would we be looking for it and we have Technical University of Nairobi?
And we are bringing in some Indian company to come and do this.
We have Multimedia University.
We do.
We train engineers.
Yes.
Why don't we domicile innovation there so that all these solutions, technical, 100 billion to them, can imagine our university earning 100 billion, they become self-sustainable. So all those, I think we must change and tinker our economic model.
I get you now. Nimeelewa.
Nimeshika. Okay.
Kabisa. Very well said, very well explained. And now that tells us that gap between falling inflation and
high cost of living and no economic growth.
Shrinking pockets.
Yep.
Yeah, everybody's saying, please invite Dr. Nani again. You'll come back, please.
No worries.
Please. Dr. Gachie will be back, and yes, we need to actually look at and start reviewing. We'll look at, so are these sectors working? Are these things working? Dr. Steve Gachie, economist, business administration and management consultant, has been our guest.
This is the Situation Room, the only way to start your day.